Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Podcast for a December 15th, 2021. Podcast always brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, 2289, our NMLS number. And joining me today, Mr. Harvey Freed, the host with the most, 97.1 FM, Hardcore Mortgage Real Estate Business Show, heard every Saturday on Detroit Sports Radio, 97.1, the ticket from 9 to 10 a.m. Harvey Freed, good morning, my man.
Good morning, Harry. What's happening?
Well, what's happening, Harvey Freed, is here we are in the middle of December. And as you know, we do the show every week on the radio. We do the podcast every Wednesday at 11 a.m. And
Right.
What we're coming up with is, obviously consumer advocacy, information, education, and just trying to let people know what to do, what not to do, and just offering up our advice. But right now, Harvey Freed, it's December 15th. We're going into the last half of 2021. And what a 2021 it's been, not only in real estate, but in what we call, and we don't like it, the real world. So Harvey, I'm going to ask you the question, December 15th update. What's affecting the market? I mean, there's COVID concerns. The Fed's going to announce further rate hikes, probably liquidity in the bond market, Fed tapering. What's going on? Inflation fears, CPI continues to rise. All the questions are, is this transitory? Harvey Freed, how's this going to affect the market? What do you think?
Well, Harry, with all those things going on, which go on daily in today's world and the markets, real estate has been a shining star. And it's sort of bizarre that we're so fortunate enough to be in this real estate market because sure enough, COVID hit and there's lockdowns, and we're actually told initially that we're sort of, we're essential workers, to be honest with you. We're helping families save money. And sure enough, we thought interest rates were so great, Harry, right before COVID hit. And with all these same indicators out there, the economy was really, if you look back 2.5 years ago, sort of similar to today's market. Yet interest rates, it's still all-time lows as they dipped under 4% when COVID took place, Harry. They're still that low. And what great opportunities families have had. It's really changed the whole dynamics with, again, Harry, all of those things, a smorgasbord, you said them all. CPI, every day the stock market, what's going on with shutting down oil, COVID, pandemics, overseas, Russia's on the border of the Ukraine. And sure enough, real estate's a shining star.
Well, Harvey, to recap that, March of 2020, when all this hit, there was a lot of uncertainty in the market. And here we are, December 15th, 2020, there's still uncertainty in the market. But what has happened, as you so eloquently put, real estate has been the shining star. You looked at properties increasing in value. You looked at people going ahead and being able to work from home. So they kind of hunkered down and improved their space if they loved it. If they didn't love it, they were out on the market looking for new homes, which the lack of inventory, Harvey, has driven the price up in everybody's neighborhood all around the United States. Here in southeastern Michigan, we're running into, like everybody else, a low inventory problem. But on December 15th, you're looking at a situation, Harvey, where the average time on the market for a new listing normally, whatever that means now, right, normally is about 90 days. But in today's market, it's half that. It's about 45 to 48 days. So what's going to happen? What's affecting the market? Of course, COVID concerns. We talked about that. Inflation. Yeah. Is it temporary? Is it transitory? Or is it here to stay for a long time? Certainly people are going back now and taking a look at what happened in the late 70s to the early 80s, Harvey. Mortgage interest rates were at 17, 18.5%. Now, we're sitting here at 3.5%. Are you kidding me? 3.5%. Is there a chance that it's going to go to 18? No, no chance. Okay, I'm here to tell you I will bet on it. Well, I have bet on it because this is what I do for a living. So I guess you could say I've bet on it, and we put our families on the line every day. So we're betting on it, right?
Well, you're conservative. Yeah, you're very conservative on that. I mean, interest rates are lower than that on some loans. Again, it all depends, you know, and I'm glad you threw an interest rate out there. You threw a number out there. And it means a lot in today's market. Their interest rates are all-time low still. But depending upon what type of mortgage you're going to get might determine that rate. And again, this is the time of the year we're going to reflect on some of the things, the great things about 2021. Families also have a great opportunity now to refinance their homes, do these debt consolidation loans. Those rates are going to be a little bit higher on cash out refinancing. But again, maybe you're dropping down to a 15-year where that interest rate's below 3% still. So there's so many great opportunities out there, Harry. And I like our sort of, as we're going to segue into a recap of all the great things going on in real estate in 2021.
Yeah, so we believe in, before we get into the refinance discussion, so what does this mean now going into 2022? Well, finally, Harvey, a periodical, which is huge in our industry and the real estate industry as well, Housing Wire magazine finally came out on December 10th. What we've been saying for a month and a half. The question was, what do you believe 2022 will bring in the real estate market? And finally, Housing Wire magazine, periodical that people go to. It is one of the Bibles in our industry, along with Mortgage News Daily. Housing Wire magazine, December 10th, came out and confirmed what we've been saying, Harvey, for the past month and a half, that they believe 2022 is going to be a strong real estate market. And wouldn't you know, Harvey, the three indicators that they believe will lead us into 2022 and continue for a hot market in 22. Ready? Normally, offers on homes, they take a little bit longer. When a house is listed on the market, usually in a normal market, you might get one offer here or there, two offers here or there. But right now, there is no indication of this slowing down, Harvey. The stat that they pulled out, statistic, we'll get a little mortgage geeky right now. 25% of the homes on the market within the first few hours, Harvey Freed, I said hours. I didn't say days. I said hours. Get multiple offers at list price or over. So that's the number one indicator, Harvey, that it's not going to slow down. What do you think about that?
Inventory and supply and demand, those hot houses are still just flying off the shelf. So the families out there have set their goals on what they're looking for. Like you said it earlier, maybe more space, the school districts, maybe more luxurious settings out in the backyard, the landscape, the patios, the outdoor living space. So when these homes hit the marketplace here, as you mentioned, it's not days anymore. It's within the first few hours. There's several offers, multiple offers, over list price. The numbers still say that homes are selling for over list. The average is over 100% of the list price on sold homes. So yeah, we're going to expect the same moving into 2022. Now, it's not to say we had recently a couple great real estate agents on the air with us on the Saturday morning Hardcore Mortgage Show. And they talked about, don't freak out though, if you do have a house on the market and you might need to readjust the price if you haven't had an offer in 23 days or 28 days. It's not a freak out time. You might have some obsolescence or some reason why you need to come down on price or why your house isn't showing or appealing to more people and getting those offers.
Yeah, I think what they quoted was, Harvey, that their clients, when they list a house, are getting all nervous and anxious if a home is sitting on the market for 6, 7, 8 days and they haven't heard anything. So can you imagine being in that position where everybody's spoiled, where they put their house up for sale? And I guess that's the irrational exuberance that we've always talked about, but that's what's going on in the market. Number two, we directly mentioned it before. The low inventory continues to be a major issue, Harvey. Going into 2022, they still believe, now this is Housing Wire, we said it a month and a half ago, we believe that inventory will be a major concern. And then those houses that are properly staged, Harvey, that's been a big theme of yours for the last 5 years. If your house is properly staged and it's attractive, it's not going to be on the market long, right, Harv?
No, the agents have actually put these whole real estate programs together where when they list your home, that's what comes with it. They might offer, the olden days, they would just offer a home warranty, maybe that would be appealing. But why throw money out there just with a home warranty? Instead, what they're doing is they're getting money back to the sellers. They're maximizing the seller's profit by staging the home properly, by listing the home property, by putting the proper open house information out there for families to start these bidding wars. And that's what's going to continue here. Yes, supply and demand on the nice homes is going to rule 2022 again. It'll be our third year, either post-pandemic, or if we want to still say we're in a form of a pandemic, supply and demand. And boy, the supply is very low on these nice homes.
Well, Harvey, there's no doubt, getting back to COVID, we are running into that. It is not going away. As a matter of fact, I think people, at least that what we're seeing here, it is still an extreme concern. We don't want people to get sick. It's going on, and people still have to take precautions. And what that's doing, Harvey, is that it's forcing people, we'll get into this in the next segment, but it's forcing people to stay put. There are a lot of people buying, but there are a lot of people staying put. And what they're doing is they're staying put and they're improving, they're expanding their existing living area. They're adding on, they're making major improvements to their bathrooms, their kitchens, their recreational area, maybe adding, again, your favorite thing is a pool in the backyard. But the number three thing is, before we get into that, is the lack of inventory, along with the demand by the buyers, equals prices will remain high, law of supply and demand. So that is the third economic indicator in the home pricing and the home buying market for 2022, which will remain strong, is that the lack of inventory is forcing price up. The demand is still high. The prices are going up because there are way more buyers right now than sellers, Harvey. So you said it. So we believe that those three, along with other major factors, but those are the three that are going to lead us into 2022. Now let's talk about increasing your living area, Harvey, making it better, staying put for those who aren't moving. They're fixing up their houses in record numbers. All you have to do is take a look at the home improvement stocks, right? Take a look at them. All you have to do is drive on the weekends to a Lowe's, to a Home Depot, to a Menards. I mean, just go around. And I mention all these places because everybody listening knows those brand names. Even go to your local hardware store. And home improvement is serious right now. You can't get a contractor out to your house, Harvey.
Yeah, I'm looking here at cash out refinancing, and what a great opportunity, as you mentioned. You're going to have to pull the equity out of your house. Why not? I clicked in a 15-year here at a $250,000 loan amount just to have this podcast conversation. And on the 15 years on cash out refinancing, the rates are somewhere between 3 and 2.5%, depending upon your credit score, and what your closing costs may vary a little bit, and your loan amount, of course, is going to vary a little bit. But again, you mentioned it, Harry, around 3% or under on 15-year fixed cash out refinances. And this money you can put away by redoing your roof and your siding, by redoing the kitchen and the bathrooms, those structural things that are important. I had a heating and cooling guy out this morning, maybe upgrading. I have an 18-year-old furnace, and we had some maintenance done on it this morning. So these are the things that you're going to want to do in today's market because of the lack of inventory. All you got to do is watch the HGTV shows, learn a few things that you can do to fix up your home, to continuously add value to it. So when the day comes where you want to sell that house, you're able to sell it and make a lot of, make your money, or at least maximize your profit on it. And the same thing, Harry, because as we talk about, when you sell a house in a hot market, all right, you're probably going to be a buyer in another market, whether you're downsizing or retiring. So it's so important to really even sit down with us and take a look at these numbers ahead of time.
Well, the math never lies, Harvey. I mean, it doesn't. You have to sit down. You have to do the equation and see if it's worth it. But getting to the home improvement part of it, when you do home improvements, everybody says, am I going to get that return on investment, the ROI, the geeky term that we use? What's the ROI? If I'm putting in $30,000 for a new garage, remember we had that conversation a couple months back?
Oh, yeah.
So $30,000 for a new garage. When I go to sell my house, am I going to get that 30 plus back? Well, that's not necessarily accurate. I mean, you need it's about a quality of life. If you're going to stay in that property for a long period of time, It's a quality of life issue. Now, we know, as everybody else knows, bathrooms and kitchens get the most return. But the however is, and it's always a however, it's yours, it's situational. You have to go ahead and do what's best for you in your situation. So if you want that new built-in pool, if you want that new basement, if you want to put on a new roof, if you want that new furnace, Harvey Freed, and you're going to stay there, why not? And now's the perfect time to go ahead and fill out that equation of the why not. Because rates, as you illustrated, for a 15-year, 2.5% to 3%, for a 30, 3.5%. Come on. I mean, if you're going to make that improvement, also, home equity, Harvey, is what? At the all-time high, correct?
Oh, yeah. Now's a great time. Hey, Harry, I like how we're sort of segueing. One of the articles that just came out this morning, and these have been a constant theme, builders are upbeat about the new years and the numbers. Just really in the last month and the last quarter, a lot of contracts are being signed. Again, lack of inventory. They have decided either they're going to pull the equity out of the house, Harry, or they're going to move. Well, the building supply and demand is pretty tough market too. Bidding on the lots has been crazy, and depending upon where you might want to buy a house, you might have to overbid on a lot and pay a little extra, but you get what you're looking for. Again, see if that might be a very hot market, new construction, as builders continue to swallow up as much vacant land as they can. It's a no-brainer. They build them, they will come. When they build these homes, they're getting these signed contracts. And again, depending upon what style house you're looking for, new construction could be a great opportunity in 2022.
Yeah. Hey, Harvey, our friends at CNBC, you know those people at CNBC. We've been on CNBC many times. CNBC is reporting homeowners are sitting on record home equity. So even though rates are going to rise, they're going to go up, only 24% of all first mortgages, this is 10 years, 15-year, 20, 25, and 30-year fixed, including Fannie Mae, Freddie Mac, FHA, and jumbo loans. So the entire mortgage market, only 24% of all first mortgages recorded are below 3%. Okay, so you mentioned that 15-year, they're still below 3%. So that means to me, that means that translated, Harvey, what are people waiting for? Why are you waiting?
Well, actually, here I quoted a 15-year cash out refinance are still under 3%. Yes, rate and terms could even be a little bit lower. But yeah, Harry, we started the show off with what a great year it's been for real estate, because so many families did take advantage of these low interest rates, and will continue over the next couple of years. We have one more radio show coming up, of course, Saturday, December 18th is our last show for 2021. The Hardcore Mortgage Real Estate Show on 97.1 The Ticket. We want to mention that real quick. And that new construction, again, is going to be a great alternative. New construction starts here are 25% higher now, as the inventory still becomes the number one issue in today's marketplace. They can't build enough homes. Otherwise, I think we'd still see more and more buyers out there if there wasn't so much of these bidding wars going on. So as you mentioned, Harry, the new houses, they hit market. Another article that came out this morning, these homes that are hitting the marketplace, if you're in a hot area, the homes are staged properly. Boy, they throw one picture up there and there's multiple bids in the first couple hours.
Yeah, and I like it. I like it when CNBC, Housing Wire, Mortgage News Daily, I really like it, Harvey, when they confirm what we've said, because we try to put our best foot forward every day, get better every day, and give people the information they need to succeed. So when I read in an article the following quote, and I quote from CNBC, you have to take the whole picture into consideration: current debt amount, associated interest rates, how much you're looking to borrow. You have to do the math: cash out offerings, rate offerings, timeline for paying off additional debt, and so on. To make the best decision, homeowners need to run the numbers always and see what makes the most sense for their particular situation. End quote. Harvey, I wish that we would get quoted out like that, because we say the exact same thing. And I'm glad that there are people that listen to us. I'm glad that there are people quoting the same thing that we say all the time. It just validates everything that we want to do to help people be successful. Look at, if we think it's a good deal for you, we'll tell you. If we think you shouldn't do it, we'll tell you that too. And I think that's been our mantra over the last 30 some years. You know, maybe Harvey, we could have done a few more loans deceptively, but that's not what we do. I'm not going to tell somebody to do something. I'm not going to go on TV. I'm not going to go on radio. And every other week, Harvey, it's a different message. No, our message is the same. We'll sit down with you, call Harvey Freed, call Capital Mortgage Funding. We'll do the math for you. We'll run your credit for you. We'll do all the work. And you just have to make the decision, Harvey Freed.
Yeah, it's been nice. Like I said, Harry, hopefully we can help more and more families in 2022. We want to reach out, continuing doing our mortgage and real estate show and just trying to give some proper information. It's funny, even this morning, how we got into, I was watching one of the HGTV shows, and they got into home ownership and home inspections and doing your due diligence. Well, we try to offer up the same type of information, whether you're buying a house and really just sort of adding the mortgage in the home purchase and sort of putting it all together so a young family can really see the whole process of home ownership. As generally speaking, over 68% of people buying homes obtain a mortgage, and the numbers are actually a lot higher than that because many times they're cash offers and they come back and get the mortgage on a delayed financing transaction. So again, these interest rates here in 2022, although the Fed is going to meet again, if they tinker up a little bit, so be it. The economy has been pretty strong through some really crazy times, and the economic data out there continues to come in, whether it be unemployment figures or the overall economy and inflation. 2022 will probably look similar to 2021, and we urge families maybe just to get in there a little bit sooner than later. We're going to start getting those calls on paying off the credit card debt for the holidays because, again, everyone wants to overspend over the next couple of weeks. You got that equity. I think soon we're going to get a few of those phone calls, really consolidating families. And again, if we can drop you from a 30 or a 28 or a 25-year mortgage into a 20-year mortgage, boy, you can really build a lot of principal with these low interest rates. And I think these are the things I want to focus on with families is forget all the noise out there. Everyone needs to take a look at their own financial backyard and say, hey, I can drop 5 to 7 years off this mortgage and really build a lot of principal with these low interest rates.
Yeah, I agree with that, Harvey. And people should not wait. You know, can you believe that there are people still waiting? And first of all, the Fed is going to most likely announce today that they're going to announce a faster wind down of what they do in their bond buying programs, which will trigger interest rates going up. They're probably going to give some targeted dates, more specifics, and tactically, you know, hone in on what the Fed is thinking. They're going to release that today. And also second is that this is only one of 4 meetings this year and where the Fed goes ahead and releases economic projections, Harvey. So they're going to give kind of more of a roadmap on what they're going to do throughout 2022, specifically today. At least that's what we're hoping, because then you can kind of gauge it, but you never really know. External factors, inflation, COVID concerns, what's going on around the world, all has to be taken into consideration. But again, that's just mortgage geekiness. Getting back to the radio show this weekend, Harvey, we're probably going to do our year-end show this Saturday. John Cole, Becky Alley, Harvey Freed, myself, we're going to be on, recap the year for everybody, December 2021, and what we feel is going to happen in 2022 in terms of from our mortgage perspective. We're going to try to stay out of the real estate, but real estate every single day, we try to stay in our own lane. We don't sell real estate. Some of us might be licensed realtors, but that's not what we do. We do mortgages only. And our livelihood is depending on giving the best information that we can to as many consumers as we possibly can reach. And therefore, that's how you're successful over a 30-year period of time, just remaining consistent in the message, Harvey. And I know you always do. There's nobody that puts together a better file than you. Sometimes you don't agree with certain things, but nobody puts together a better file than you. And your clients really appreciate it, as illustrated by the comments that they make, and for our entire staff. people that have been here 25, 26 years, even going on 32 years. How about that, Harvey Freed? But I will say it's been another great 2021. This could be the last podcast of the year. I don't know. We haven't decided yet. You know, for our producer, director, Roberto Beauchene, he's in the booth right now. He always does a great job. He does a little bit of social media for us. He produces and directs your show, Harvey, on 97.1 FM every Saturday from 9 to 10. And we appreciate Roberto. Harvey, what are your last words for today?
Well, again, Harry, we focused on a few things. We'll talk about them again on Saturday. And it's time to refinance your home. As we continuously have been urging families, another window of opportunity here as rates have stayed low throughout 2021. There's a couple times there where we saw it could have went the other way, but economic factors, Omicron, things of that nature has kept the mortgage interest rates still at all-time lows. Get in. Did I say it right? Omicron. And please.
Omicron. Yes. Omicron, not Omnicron, but it's okay. Omicron. We're mortgage professionals. We're not doctors.
But the next virus or the variant will come with its own name and circumstances. But again, these are things that are affecting the economy, interest rates at all-time lows. Refinance your mortgage. And if you're looking to buy a house, give us a phone call. I'm meeting a young couple actually here on Saturday, Harry. We got to get families started a little bit sooner. And I'm glad they're coming in sooner than later and show families how to save money and just put a little bit of savings away because you can take advantage of this great real estate market we have.
Yeah, Harvey, that's such a great message. And, you know, you're going to be flooded with email. You're going to be flooded with snail mail. You're going to be flooded on TV and radio with messages that aren't going to do you any good. What you have to do, like Harvey's doing, you have to really sit down and go over the numbers with somebody and educate people. Okay, this is not an 8-day process. Okay, it takes a long time to collect information and make sure that you can be approved really, really fast. 8 days, I'm not so sure about that, but that's a different discussion for a different day, Harvey Freed. I appreciate you being on the Hardcore podcast, Harvey. Hardcore Mortgage Real Estate Business Podcast, brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage Corporation. Equal housing lender, 2289 is our MLS number. For Harvey Freed, Roberto Beauchene in the booth, for everybody that's on vacation, we'll see you next time.